Happy Tuesday, everybody. Let's get into the Bitcoin analysis for today. So, having a look at the chart, we'll compare our bias from yesterday. So, our Monday bias for Tuesday was the weekend candles were a small bullish sentiment. The AO had turned negative and was bearish, and the SMIO down the bottom here was negative and turning bullish. So that gave us a divergence between the two moving average momentum oscillators. But we also saw that we were coming up to this level of support at around the 65,000 mark. So which was resting just above this imbalance. So our bias was that we were going to target this lower imbalance before coming up to take out some higher prices. So let's just zoom into the 1 hour to see how our support and resistance liquidity zones held up. So yesterday we were speaking at around 3 o'clock, which was here, and the 2 points we were looking at was coming down to sweep these two resistance with the low of these candles back here, with the opportunity of coming up and sweeping this high of this current range through here, sweep up and come down. And so what we saw is around here, when we reach this point just here, let's just make it a little bit tighter. Once we came down to this liquidity grab and this liquidity point, it fell through, came up, retested, and then fell away. And if we were to look back here, we do have a low which we missed. Just down here in the corner. Actually, let me just move this up to the other side. I feel like that's easier. Alright, I think that's better. Alright, so this was an area that we could have been looking at, but I did miss. But also that situation at this liquidity point around the 65,300 occurred between 11 p.m. last night and 1 p.m. this morning. So I was definitely asleep and I missed that. But that was a really nice bearish candle, instant rejection, bullish candle, and that to me is a good liquidity grab trade. So there's either no wicks or an instant rejection. So that was really nice on that low. So that would have been a good buy. Had we gone in that direction, we could have entered on the low and targeted the highs. So there for a nice 5.3 risk to reward. However, I was asleep, so we missed that. But this morning at 5 o'clock, once it rejected here, it came up to test the highs of this range, which was our other liquidity short zone. Came up, rejected, fell straight away, almost engulfed that entire candle. So that's a strong rejection in that zone. In that zone around 66,975. So we didn't quite reach the 67,000. Actually, I lie. We broke above 67,000. We we didn't come up to retest the range high, but we fell away, and that was a really nice opportunity which I took this morning. Stop the high to come down to target those lows of a 2.5 risk to reward. So that's a really nice trade there, but I'm holding it because I do have that anticipation of coming down into this imbalanced point of interest. And then let's look where we sit. So we still come down, so this is today, this candle, which is only 4 hours old, having been reset at 10 o'clock Australian Eastern Standard Time. So we are still looking to take out this imbalance. So far we have swept, touched and rejected off the lows from the Thursday, the 16th of May. But having only been 4 hours old, we still have an extra 20 hours of the day to see where this candle goes. So let's work out the Monday bias, and we'll see where things go from here. Alright, so Monday bias, Tuesday bias. The Monday candle swept the weekend highs with a small bearish sentiment. Now let's have a quick look at the indicators and see as the AO is still negative and bearish. The SMI, excluding today because that is only a 4 hour old candle, the candle it was bullish and it's still bullish. So it's negative and bullish, the AO is negative and bearish, and our bias is still moving lower to target the imbalance, down and sweep through here. Alright, so let's move down into the hourly chart. Alright, so I am going to leave this price here at 64,616 because that only just got touched 2 hours ago, sorry. And so let's just hold that there because we will be looking at it tomorrow anyway. And let's just build out here. So we've got a high at this wick, which just builds liquidity above it. 67,299. Always best to check. Prices come up, rejected, come down, come up to retest, and it's fallen away. That's our point, that's our point. And down here hasn't quite determined a new area of liquidity because it's still sitting in that area just above the imbalance. So that's a real critical point, a real critical area that we need to watch out for. We are definitely on the bias of shorts until proven otherwise. And that's fine because you can still have a bias for a certain direction and it doesn't have to be long-term correct. It can be short-term correct, short time frame correct. So we can just watch it. If it confirms and we get it move, perfect. If it doesn't, then we don't get the move and it blows through what we're expecting and we don't get the confirmation to go short, that's fine too. It either works or it doesn't work and we move on to the next trade. That in, we'll throw a little alert on that because that's our closest candle. I'm certainly not looking at going long at this point. I'm definitely have the short bias, but I just want to be notified when we cross this bar. Alright, so what we can see here is that we've got this rejection where we've pulled down and we've come up. We do have a 1 hour imbalance through here. So this imbalance is a great place where people are putting their stop losses because they've all gone short and they're all potentially could be liquidated. But people are also putting their buy limit orders to go long because if it comes around here, if it breaks above here, then it could whoosh up. It should, because there's not a lot of transactions that have occurred through there. So that could be a real point. So people put their stops and their stop losses and orders in there, but it doesn't necessarily mean that there's been trades that have occurred there. Because if you can kind of see, if we drag it back across, trades occurred back here on Monday, but then it blew through and it's fallen back down. So it's been a real whoosh up, consolidated, distributed, and fallen back down, and now we're in accumulation distribution stage. So worth keeping a liquidity zone just there, liquidity level. So let's put that at 65.9562. 956.2. Cool. Let's get rid of that. So let's just look at this. So here we are coming up. Here we are coming down. And then we are coming up. And here we're coming up on the SMIO. So, which is fine, because what we're expecting is because the SMIO indicator is a strength momentum indicator which focuses on moving averages, but it focuses on the medium average, the medium point of the candle, as opposed to the AO, the awesome oscillator, which focuses on the average between two moving averages at close. So depending on how wide the candle is, the SMIO works in a sharper, less confirming move. So the AO gives us more of a trend, where the SMIO indicator gives us more of a trigger. So there's a trend and a trigger. But nothing can be moved without the confirmation of a price and candle. So, with these in mind, what we're expecting is for the SMIO to come up, retest the zero line, or slightly break above, could potentially hit this 65,950 and then fall back away. That's my bias. So if I am to expect any particular move, the two moves I'm expecting are up, retest, and down, and break down through these levels, or break down, retest to take out all-time highs. Sorry, I lied. Not all-time highs. We're expecting to take out 67,350. They're the two ideas that I've got in perspective. However, should we come down here, I am looking for a deeper mitigation, because within this zone, let's just make it all significant. There we go. So if we have a look at where this imbalance has actually occurred, there really isn't a lot to sort of pay attention to. So as far as the hourly goes, we basically have, so the candles that have caused this imbalance between this high just before the breakout, because that's over on Tuesday. So we've got this candle, this high here, and this low over here has caused this. And it's basically formed between 1, 2, 3, 4, 5, 6 candles. And within those candles, we see, let's just draw it as the wicks have been formed. So we have up to this level, we've come back down to this level, we've gone up to this wick, we've fallen to that price, we've and down to that price, and then up, down to that candle. Oh, let's get another one. Come down to that price, up to that wick, down to that wick, up to that wick, down, up, alright, so this price direction essentially has created this impulse up to here. So through here, so this impulse essentially made this move of the purple line all through these wicks from open, low, high, close, open, low, high, close, open, low, high, close, all the way up to the top. So from there, we can distinguish where our liquidity grabs could be. So we've got one here, and a third one just there. So within those times, that helps us generate where our liquidity points are going to be. Within this imbalance. Alright, so let's just tidy them up. So we'll get rid of that, get rid of that. And this is how I just run through my style of thinking. So we've got 6, 4, 3, 6, 8. And we've got 63, 9, 7, 8. And then this one is 63, 5, 6, 7. 5, 63, 5, 3, 7. 5, 3, 7. Alright, cool. So there are our zones. Oh, missing one. What is C3? 3, 64, 3, 6, 8. Alright, so they are our zones within this imbalance, and we'll watch those as we fall through. And then if we keep falling, we'll just zoom back. We'll go back in time and we'll see where those indicative prices are. think that's about it. So, happy trading, everyone, and I'll see you tomorrow. Checking in tomorrow. Alright, guys, I think that's it. Thanks very much for tuning in, and I will see you tomorrow to reflect on what went right, what went wrong, and what direction we're taking then. See ya!